I'm Genevieve Leveille. I am the CEO of Agriledger, and I also happen to be the vice chair for the DLT working group at Tech UK, which is going on almost 5 years now. So this is to say we have been working on this for a long time, and we've seen a lot of things come through. And it gives me great pleasure today to actually be sitting down with the one and only Anthony Day of IBM.
Genevieve, thank you very much for having me. Hello, CogX. Hello, Tech UK. Shout out to everyone who's made today so successful. It's been a brilliant day in terms of speakers, in terms of insights, in terms of active sessions. Really delighted to be part of it. Thank you for letting us close the show today. For those of you who don't know me, my name's Anthony Day. I'm a partner at IBM focused on blockchain technology, which means helping enterprises, governments to make interesting and difficult choices around how to think about multi-party systems, about how to solve some of the world's problems related to supply chain provenance, identity, authenticity, government, digital identity, all working together in collaboration using blockchain technology and others alongside it. So very excited for this. We've promised gloves off. We've promised an open conversation, no holds barred. So Genevieve, let's get it, shall we?
Sure, let's get going with this. So the first thing we're going to go on is we know it's been hyped and a lot of people don't know what's going on. And every day the newspaper is coming up with another news story of something big going on. So
are we talking about my podcast or something else?
Your podcast is a great way of going in. So if anybody hasn't heard the podcast, The Blockchain Won't Save the World, I think there's some truth in this, but we do hope that it can help make the world a better place. So the first thing I'd like to ask you is, in your point of view, what kind of guidance would you give people, mostly in the startup world, who want to get into blockchain technology? How do you start?
Brilliant. Well, thank you. That's a really good question. And for those who are working in startups or who aren't already established as technology providers, integrators, layer 1, layer 2, wallet providers, etc., the ecosystem around blockchain is relatively mature at this point in time. There is always constant innovation going on. There are improvements. Even today, there was an improvement announced to Bitcoin's core protocol, which is super interesting, but we're not going to get into that. What we're trying to see at this point in time is what I often say is we've proven most of the technical concepts around what blockchain and adjacent technologies can do in terms of security, in terms of identity, in terms of tokenization, in terms of where we can link that to other systems, cloud, hybrid, multi-cloud, ERP systems, public, private, yada, yada, yada. Right? Most of these patterns have already been proven out to some extent. What we're looking to achieve, what we're looking to create is demonstrable value in context. Right. So it comes down to, is it valuable to customers, to users, to citizens, and is it commercially viable? Right. Have we created a platform or a form of digital transformation that is sustainable? What we're not trying to do is blockchain for blockchain's sake. Right. So if you come in and take an established concept and say, I'm going to put it on the blockchain, it will suddenly become valuable or we're going to solve the world's problem. That is the exact opposite. That is not blockchain saving the world. What we need from startups is to understand a particular industry challenge or a particular problem in the world where the idea of open systems, open connectivity, tokenization and incentive systems, automated econometric models, the ability to automate processes through trust, through better data, through aggregation of information can change things for real. Right? What we don't need is more blockchain evangelists. What we need is more practical application of decentralized technology in context. That's the bit that, again, the same applies to people who want to work in blockchain, whether they're startups or not. Why do I want to work in blockchain? Is because I want to deliver or I want to be part of digital transformation, helping technology to improve things, to help us grow, to help the world become more sustainable by working in this space, by applying some of the thought processes, some of the models, some of the game theory, network effect, tokenomics. These are things that interest us as intellectual constructs. Now I want to go deep and apply that in a particular domain. If you start from that standpoint, rather than saying, I really like the blockchains, I'd like to do some blockchains, please, you've got a greater chance of having a great impact.
So that actually brings me up to, there's a lot of talk about the SDGs lately, or the ESG. And the big ones, obviously, this week is the G7 with the environmental. It was very interesting to hear about the green belt to combat the Silk Road, as they say. But a lot of people are saying blockchain is a solution toward that. And I think that, obviously we have several things: environmental, socioeconomics that need to be fixed. And as part of the pandemic, we see a lot of broken aspects. So in your point of view, if you were to look at a use case among those which you think has the best chance of scaling up in the next 12 months, what would it be?
That's a great question. So from my perspective, I realize that climate change and socioeconomic good is a physical, real world challenge, right? That's a non-digital challenge for the most part. But my view on how do we address sustainability is it's a data problem. Firstly, can we identify the current state that we're in? In most cases, industries have complex supply chains of multiple different layers, and it's very difficult to baseline where are we today? How much carbon are we producing? Where are the goods that we're sourcing coming from? Who's producing them, right? Typically, suppliers or manufacturers rely on their first tier to give them the information they need, or just to tell them, I will comply to these standards, it's okay. What you don't see is the mess then of aggregated information, spreadsheets, manual inputs, data errors that happen in the second, third, fourth, fifth tier as you get lower down. And so the impact that you're actually having is harder to surface. So the ability to have a single view of data, or to be able to track particular products or particular impact of products from start to end, whether you're talking about vehicles, whether you're talking about fashion, vegetables, it doesn't really matter. The data in our supply chains are critically important to help the humans in those ecosystems to make better choices. What I want to see, and this is going to be critical to every organization in every industry now until forever, is the traceability or the visibility or the provenance of what you do, the impact you have as an organization. There is a need for a dedicated core competence in that area for every organization from today until forever. Right? That is in some cases a side desk activity, or it is something that is given to just the supply chain team or just the data team. No, that is core to every activity you do, whether you're manufacturing or services. What you do with that is you're driving eventually towards a control tower that allows you to make choices for your organization. Say, at the moment, most organizations optimize, particularly for physical supply chains, you're optimizing for on time, in full, and lowest cost to serve. Right, you're typically optimizing for profit metrics or efficiency metrics. I want to see a control tower in every organization that optimizes for those two plus sustainability or ESG. It's saying that the choices that we make about how we procure, how we source, how we deliver, how we fulfill will always be optimized for ESG impact at the same time. And you cannot do that sort of automation, or you cannot do that sort of proactive view without the data that underpins it. And so the requirement is going to be for most organizations to get closer to its data, to enable those in the second, third, fourth, fifth tier to engage with those data platforms. And to be clear, I haven't used the word blockchain yet, right? Because a lot of this isn't necessarily a blockchain problem. But what blockchain is very good at is providing trusted layer to allow for the identity of those organizations to be visible, for the validity of the data that they're entering to be checked, for automation around certain activities to enable that control tower to operate, that I can source based on proof that certain sustainability metrics have been met, or certain ESG impacts have been confirmed, or certain certificates are in place. And you get then to a more digitized, connected, sustainable view. It still comes down to physical real world impact: less trucks on the road, more sustainable vehicles, less waste. Wherever you apply those principles, that control tower, it's going to be different industry by industry. But what is fundamental to all of those transformations is data and the data platforms that sit underneath them.
I'm so glad you called it that, because to me, when people ask what is blockchain, many a time I say it's nothing else but a very fancy, very good, you can't erase database, which actually brings it to the fact that the next part of this is really, how do we get data out? How do we provide that assurance? Because you said, I'm not using blockchain, but we are using databases. So therefore, how do we maintain that security and that trust and immutability, to use that word, is really going to be key. And I think that right now, it's a new database. It's like when we used to do SQL, you didn't put everything on, you had still your spreadsheet, but hopefully in the next 2 or 3 years, we'll see where you can actually start putting more data on the system.
Yeah, and I'm going to contest that one for a second, because I think that's an intellectual shortcut that some of the haters do take every now and then to say, well, blockchain's just a fancy database, right? That's it's why
No.
just create an Excel with macros and you get the exact same impact. If that is what you're using your data platform for, then yes, if all of the features are is that it is an aggregated place in which to put data, then yes, you are not making the most, and you have many other comparable architectural options for what you deploy to solve that, to create that digital capability. What you are having though with these sorts of data platforms is it is identity and digital identity of the organizations, the machines, the equipment, the sensors. Right, the more data points that you get onto the platform, that you connect to the platform, and the more permissioning that's required for those data sources, the integrity of the system improves because you've connected them up. The automation of business process or workflows that are linked to that platform that we can enable through smart contracts are a level on top of that I'm not saying you get for free, but that you get embedded in that you don't get with a macro. Right, and so some of those platforms are more mature in a way to handle and enable that. And then we start talking about tokenization and incentive models and programmable activity, programmable tokens that can relate to proofs, to procurement, to inflate or deflate based on certain activity, algorithmically or not. All of that in the hopper, that's not a fancy database. That's a fundamentally different way of orchestrating your supply chain.
Okay, I got slapped. I just was saying to
I
make
told
it
you
easy.
the gloves were off. I told you they'd be off.
No, but you also realize that for my my foray into the implementation, I had to deal with people who don't even have a smartphone, but are able to, and this is really where for me impact is so major. You don't need a smartphone, you need information. And when I'm trying to explain it, if you try and explain what you said to half of the world right now, they go like, not for me, too much
information.
But
I hear you.
Layering it is what's important. And really, I think this is really one of the challenges. And I would actually like most of your role in consultancy, because obviously the startups are the ones doing it and we're disrupting. On the other side, you have all these corporates which are taking patents, which I don't understand for. They're just basically marking a spot when they don't really know what they're doing with it. And so how does a conversation need to be had? Because I'm sure there's a lot of people on the audience who would like to know how to go about it.
Got you. And I think that let's look to some really interesting examples. And some of the more, I'm going to go country by country to start with, because I think some of the work that we see in the Netherlands, right? Again, shameless plug again for the podcast, but the most recent episode was based on the Netherlands. And I was always pointing to the Netherlands as one of the countries in Europe that's doing the most around blockchain, because they have a pattern around collaboration, not least of which 500 years of culture of collaborating to fight back against water, of working together. And they have contracts specifically like the Dutch Blockchain Coalition, where they have public-private partnerships. No project that gets commissioned happens without having government, the private sector, and a startup involved. And these are some of the rules of the game that actually allow for that collaboration, the innovation, the speed to happen. If you just leave it to the private sector, you lose the government angle around regulation and any particular elements of policy that need to support those transformations. If you leave out the enterprises who typically have the scale where the startups don't, you're missing a part of the picture. And in some cases, those startups bring innovation or ready-made accelerators that the rest of the world doesn't have. That public-private partnership model is super important for progressing the thinking, for allowing funding to get used appropriately and to push things forward. In Singapore, the Tribe Accelerator, again, government funded, designed to bring through blockchain startups to address problems that are sourced from government or from the private sector, and specifically drive things forward to demonstrate the art of the possible, rather than small organizations trying to fight for market share or fight for interest from the open market. They're actually trying to funnel some of the talent and the capability towards addressing real world problems that we know exist. And it becomes more coordinated, you get more buy-in, you get more scale quickly. Those are some of the models that I think are worth other people kind of looking out for and learning, saying, actually, if we're going to scale platforms, we need network effect. If we want to get network effect, we need to get a minimum viable group of people together to make it happen. And public-private partnerships are a great way to do that.
Wonderful, which actually brings me to the latest in terms of what's happening in the government. So 2 weeks ago now, we had Miami. And I like to think that CBDCs are, the precursor. It's version 3, version 4, but digital currency coming into central banks, and every day there's a new announcement. I think now we're up to 180 countries who are looking to implement. What are your views, and what do you think is going to make this successful or unsuccessful?
Got you. So I'm going to caveat my response with, this is not an area that I spend a lot of my time. There are others who are far more experienced than IBM than me, the likes of Ryan Rugg or Luca Comparini, who spend a lot more of their time in financial services and digital assets, who are doing some amazing work. So please, anyone else who's out there, go check them out, go pester them on LinkedIn, go ask them hard questions. They love that stuff. But broadly speaking, if we're looking at the transformation of financial services process, transformation of lending, of crowdfunding coming through from government downwards, I think that's a good thing, right? If we're looking at trying to improve the efficiency of the financial system country by country, generally speaking, good thing. Some of the concerns in this space are the programmability or the ability to use programmable money to identify individuals. Now, it's not that couldn't be done today, right? Most of our financial systems are digital. Most of the KYC and the attribution of transactions to accounts is possible, right? We say that in crypto and blockchain and Bitcoin, we have a degree of anonymity. We've also got the ability of, people are still tracking down whale accounts and being able to identify individuals, even though we have anonymous transactions. So it's risky to take too purist a view on the good and the bad in this. And the good thing is that we're seeing experimentation. Seeing lower cost of transactions country to country is super important. If you look at El Salvador, recent announcement of allowing Bitcoin to be legal tender, by which means that citizens can pay their taxes, right? We're not seeing in the bodegas people paying with Bitcoin all the time, right? That's probably not what it's going to be the primary use case. But the president talked about remittances, access to funds from other El Salvadorians outside in the world who are sending money home. And that's super important because the cost of that to citizens, or the ease through which that can be done with citizens outside of the banking system, or even potentially for those who are working abroad who are unbanked, it's not full participation in the established legal financial services sector. But ultimately what they're looking to do is channel money back to citizens domestically so that they can benefit, so that they can elevate and advance. And that's a good cause. And so if we can enable the cost of remittance, of inter-country money transfer in a real-time, seamless, more efficient, faster kind of way, so money can reach those who need it in a again, appropriately fast, appropriately governed model, that's got to be a good thing.
I'm going to challenge you on one thing. We need to make those wallets much more easier to use. And also stable, because some of them, there are some great ones out there, but you don't always know. So I think that's the UI UX is something we still need to work on.
And this is where the startups come in, right? This is the key role for startups, is take crunchy problems and break them down, right? Yes. There is an individual digital capability for each end-to-end user journey. If there's a part of that that's blocked, if there's a part of that hasn't been dealt with because the big infrastructure guys are too worried about the big infrastructure and they're not too much worried about the UX, go fix that problem and see what happens. There's a number of blockchain as a service, wallet type of providers who are doing just that. You're still thinking, well, why are there so many of these guys? It's because country by country, language by language, jurisdiction by jurisdiction, exchange pairing to exchange pairing, it's still a bit of a mixed journey. So startups, if you want to go solve problems, go make UX better in blockchain.
For sure, because I think a lot of people don't realize the blockchain does not have a UX. It's like that front end is necessary. And without that good front end, really, if we look at the beginning, it's changed from, I was speaking to a friend the other day, and she was telling me when she first bought her Bitcoin in 2012, you had to go on a website, get a number, go to the back, give that to somebody, wait and see if I have money. Nowadays, much more easier, but we still have a long way to go. And wanting to tell everyone in the audience, we will be taking questions. So please feel free to send them in and we welcome them. So I have the latest craze in blockchain these days are NFT, or as they say, NFTs. And it's amazing to see. It's scary in other ways. And now I'm finally getting happy because the lawyers are starting to talk a little bit about it. So I want to hear your take on it. And see where you think it's going to go.
Where do I start on this one? I've spent a lot of time on this one lately. We've done at least 2 episodes of the podcast, an entire roast on NFTs, on kind of the good, the bad, and the ugly. So we've had some fun with it as well. But let's peel it back for a second, because we've had tokenization since more or less the beginning of when Ethereum was launched. So we were able to create tokens, fungible, non-fungible, different variations on tokens. And there are at least 10 or 12 different variants, right? There's no sense to go through them all now, but tokenization has always been there. And what it is that we're tokenizing, whether it be a share, a property, the ownership of a particular item, fractional ownership of something, a unique collectible. There's a whole bunch of different use cases in which attributing the ownership or the ownership rights digitally to something, whether it be digitally native or physical, but then with a digital representation, helps us to make the ownership or the experience of owning that bottle of wine, garment, whatever it might be, watch, etc., more interesting, more compelling. Right? A lot of our warranties, our receipts, all exist somewhere in paper format elsewhere in the world that, to most of our usual daily experiences, we just don't get to interact with those things. From a brand's perspective, having customers engage more with their product, its provenance, encouraging the circularity of that product by allowing you to trade it, to capture more information about it, gets, and starts to enable ESG type of activity. That's where I'm start seeing more interesting or more kind of relatable traditional use cases. What I think we've seen in the last 6 months or so is we've seen the benefit of democratization of the technology. So blockchain broadly democratizes access to tokens, access to launching and minting tokens, cryptocurrencies, whatever it is. The barriers to entry of creating your own tokens is so low now. Of creating your own non-fungible token now is so low, save for gas fees if things are particularly high at a particular time. Anybody can get into this, which is super interesting. That having been said, the use cases that scaled, or the ones that got the most media attention, were the likes of Beeple burning a Banksy piece of art and that being sold for $68 million, or meme tokens that the rights to a particular meme or the rights to Jack Dorsey's first tweet sold for $500,000 or $2.5 million. Every NFT that made it into the press was sold for at least $500,000. So everyone's rushing in saying, "Oh my God, if I launch an NFT, I make $500,000." The reality of that is you've got whole loads of people participating in the token economy and getting involved in creating content. But those pieces of content that were actually valuable or that remain valuable, will have something more specific about them, right? Just being a token doesn't immediately allow value. It allows it to be exchanged and minted and transferred more easily, which is super interesting. Where I think this goes, right? And the other interesting thing about the Beeple is it's tokens on tokens, right? Because it's actually $68 million was paid for that one NFT, but it was actually fractional ownership. It was a fund in which a number of people put capital in. So they've each got a token that represents a share. So you've got 2 different tokens on tokens in that particular story. Park that to the side. Where this gets interesting is how an NFT becomes valuable is, on the one hand, it's scarcity. So scarcity of things like baseball cards, one of one, crypto kitties, rare Pepes, whatever it was, the OG NFTs were rare because they're old, because they were limited, because they're retro, because people who are into the scene recognize that those were some of the earliest interpretations and they may have value. In the same way a baseball card from the 1950s might have value because they're old and rare. When you start getting into some of the more interesting use cases around art or fashion, you're not talking about collectibles here necessarily. You're talking about expressions of creativity. It might be about digital sneakers. If you look at things that the guys at Artifact are doing, that's interesting. And if you own the one of one limited edition Artifact sneakers, that becomes valuable if Artifact's eminence goes up. Or you buy a concert ticket to Kings of Leon, and that becomes more valuable because something about the band means that they get even higher elevated and people are more excited to listen to their content. That gets kind of interesting too. But you've kind of got to layer on the uniqueness about what it is you create as that token. And so where I see the direction of travel is that those digital content creators, or those pieces of digital content, get elevated by other platforms or other use cases. So take the Artifact example. You get a digital sneaker that then gets enabled into an augmented reality or to a gaming platform experience, so that one unique design gets brought into Fortnite or Roblox or wherever it might be. gets owned, used, modified by another content creator, whether it's a gamer, whether it's a fashion writer, whether it's a celebrity, whoever it might be, and then after layering on that context, gets made available to the public. Right? If you want your avatar to wear the sneakers that Ninja won the Fortnite Grand Championship from, that's got to be worth something, right? You just take a picture of your cat and launch it as an NFT. Different story, unless you happen to be Robert Downey Jr. or Tilda Swinton or whoever it might be. Maybe their cats are more interesting. Maybe Jack Dorsey's pet, whoever it may be. The Zuck's goats. If he wants to goat his NFT as goats, also potentially interesting. But it's those crossovers where I think we're going to start to see some really interesting stuff.
I actually like to think also, so first of all, I don't know if I shared with you, my 13-year-old nephew wrote an article about NFT without talking to me, of course, for his school newspaper. He's doing really well. He just got accepted to 92nd Y, so I'm really proud of his ability to write. But
what's his name? Let's give him a shout out now. Let's get it.
Lance Leis is his name.
All right. Well, Lance Leis, shout to you. Keep up the good work, and in about 6-7 years' time, you come find me, and we'll get you a job at IBM.
Wonderful. But what I also think, though, is what I think is great about the NFT use case is that art is a way of freeing people's mind. And, when you do art, you actually are taught to think outside of the boundaries. But where I see myself actually NFTs coming back, as you said, it's a token. So it is a token that can be used, let's say, to represent an asset. So we have had asset, basically this whole idea of digital asset, the view of doing digital twinning, but they've been very much difficult to get people's hand around that. But I think through art, we're starting to see the flow that is necessary. So wanted to see, at IBM, obviously, I'm sure this is something that's coming to play. If I look at trade finance, this is a great place to start with that.
Wow, how do you do the juxtaposition of art freeing things up with trade finance?
One of them is married to the other. How's that?
that would make for a really interesting marriage. But I think the democratization and lowering the barriers of participation and use of this technology in the likes of art allows people in many ways to innovate around what the technology can do. Through that, we can get expressions of the art of the possible technically, or in terms of a user experience that matters. And whether people get excited by NFT-based video games, or whether it's an NFT-based crowdfunding platform, or whatever it might be, we demonstrate in micro examples of how experiences could work for other scaled organizations, enterprises, governments outside of that. And all we have to do is point at that little example and say, that's what could be possible. Now just apply this in this bigger context and look what we could do differently. And whether it is trade finance, whether it is financing, whether it is mortgages, payments, whatever it might be, that the benefit of that democratization is good for everybody.
Wonderful. We actually got our first question. So the question is, with such a focus on crypto, despite there being so many other products, use cases built on DLT, which areas do you feel will be fundamental in the future for social change and global development?
Interesting question. And I think the two are overlapping, right? Because what we just talked about with El Salvador was a crypto use case that I think will benefit social change in that country, or at least elevate well-being and help take people out of poverty, particularly if you're talking about remittances. But we'll park that one and say that was crypto-based, so we'll move over there. If you're talking about social change and development, and again, I tend to take more of a sustainability focus with this. And we talked at the beginning of the show about the role that data plays in transformation. If we're looking to create social change, or if we're looking to encourage development, my view is, how are we working together to create the data points, or to identify data that will allow us to make change? Whether that's relating to sustainable sourcing, whether that's relating to using sustainable materials, I think there's a huge amount that can be done in encouraging circularity. Now, if you look at early examples like Plastic Bank, that have a token-based model around creating demand for reusable plastic, that then can go into production facilities, being able to offer a wage, being able to offer incentives to the general population to identify and find reusable plastic, take it from the ocean, take it from trash, take it from beaches, take it from wherever we find it, and then incentivize that, bring it back through to the manufacturers who can do something with that plastic and create a more circular economy there. That's at a microcosm level, right? The intent with David Katz and Plastic Bank was to enable people in more developing economies to earn a wage from solving some of the world's problems at the same time, right? So there's a huge philanthropic goal behind that. You take that same concept and level it up to all plastics everywhere, or certain materials like lithium or ion batteries or metals or whatever it might be, whatever we need to generate circularity around, where we can have an underlying economic model where we can have programmability around the pricing or the activity or the workflows, where we can validate that certain activity has been completed, even to engage with government incentives, right? We can drive change and have governments and regulators be participants on that network. If you look at carbon credits, right, this conversation I was having with an exchange earlier today, the challenge at the moment is a lot of it's project-based. And that project is being then packaged up and being evaluated in a sequential basis by an intermediary or a registry to then get the approval to issue carbon credits. This is in the voluntary market, to then be able to trade it onto a platform. And they were saying, well, we don't have enough demand at this point or supply to actually make this a viable market. Well, the problem is you've got a bottleneck in the middle, which is manual sequential processes. If you're able to digitize and automate that, then you can start saying, I will be able to keep, I can constantly move the goalposts. I can constantly update the standards. I'm not creating a project that's based on just specifically the amount of carbon I capture in this one location, in this one facility or one piece of context. I will look at how much I can do across my entire operation in this entire jurisdiction, multiple factories, multiple locations, and constantly update you on the amount of carbon that I capture. So I can kind of go up and down, flow up and down, scale up and down, depending on the value of carbon at that time. Again, just a carbon credit example. But what you need to enable that system is sensors, trust, digital identity, an underlying platform which multiple parties can participate, automation of the processes through from data capture right through down to token issuance and trading, right, as well, including the role of treasury. Places like that and those sorts of transformations are so desperately needed, and yet we're still not there.
Absolutely agree. And it kind of brings us to the next question, which I do think hits, someone is asking, coming back to sustainability team, how much concern is there on energy use of blockchain?
Has somebody literally cherry picked the conversations I've had today? Because this is so serendipitous. I had a conversation this morning. We're looking to do a collaboration, IBM, Ariane, and a particular entity in the fashion space, and they were saying, tell us more about the platform that you're looking to use. Long story short is basically saying, if this is a proof of work blockchain, in terms of the energy consumption relating to it, we won't be comfortable that that's the underlying platform we use for our project. And so tell us or help us understand the sustainability or the carbon footprint of the technology platform that sits underneath what you're doing. And let's be clear, that's not just a blockchain problem, right? Every organization should be challenged to say, what is the carbon footprint of your technology infrastructure, right? IBM's been looking at specific kind of green, low energy or low carbon footprint cloud propositions for a long time. We have had them for a while. Same story is true of your servers, of your server farms, of anywhere that you're running IT operations, right? There are a number of servers that organizations are keeping on all of the time that are actually just zombie servers, not doing anything. They're switched on all the time, wasting electricity. Waste exists in the IT function as much as it exists anywhere else. So from that perspective, we do have options. We do have less energy consuming platforms that we could work with, whether that be a private ledger like Hyperledger or Corda. If you're looking at the likes of Hedera Hashgraph or Tezos or Cardano, we'll move protocol depending on the needs and the sustainable footprint of that particular layer one. So it is a problem in the market. People are starting to talk about it unprompted. That was raised in a conversation today. So it is a thing, it is real, and it's only going to increase in consideration. I think movement to proof of stake, particularly for Ethereum, is going to make a difference. And we are generally on a better path. But that is going to be a consideration, and people are going to ask the question, so we're going to need to have an answer.
And I think Cardano is about to go live this month with their smart contract. So we should be seeing a lot more of what's going on there. So we have one last question because we're almost at the minute, 4 minutes to go. So why do you think most organizations, I have a view on that one, but I will keep my mouth. Why do you think most organizations do not go past the POC with blockchain? Mostly in other fields than finance. Is it time consuming? Is blockchain as a service too expensive? Is the onboarding? Is it lack of knowledge? Blah, blah, blah. Fill in the blanks.
All right, great one. So first things first, go to my LinkedIn page right now. Go back to the poll that I put up last Friday, which is specifically to exactly this question. Why do blockchain initiatives fail? And you'll see a whole bunch of comments from a whole bunch of really important, impressive, very well qualified people in blockchain in the comment section giving their thoughts on it. So do go into LinkedIn, do go check that out. Give that a read because there's some really interesting perspectives. I'm not going to be able to do all of that in 4 minutes, but that's a really good place to go check it out. When we did the poll, a couple of the kind of major responses were, firstly, lack of knowledge, right? That they didn't necessarily have enough of an understanding on how to scale the solution, potentially. The other one was it wasn't a great use for blockchain. And the argument is, if you're not sure at the beginning of the POC stage that decentralization or distributed ledgers or blockchain technology is likely to be a good pattern for this, you're probably setting yourself up for failure in the first place, unless you are purely looking to experiment. And there's nothing wrong with that, right? But I'd say there's probably the commercial viability is if I was coming back to one point, that would be the one that I think causes failure most often, is that these sorts of multi-party systems, whatever protocol you build them on, are complex and relatively expensive to stand up in terms of the integration, in terms of the governance, in terms of the developing the business case and the strategy behind the evolution of the platform. Level down underneath that is that people will build a platform for a single use case or a single application rather than considering multiple on top, saying what are the other applications of the platform that we're going to build. So for example, if you have a supply chain data platform that you're focused on traceability of plastics, that same platform can be repurposed for carbon footprint, for palm oil, for timber, for waste, for social good. One data platform, multiple use cases, right? So you get a proliferation of benefit from, you don't just build one blockchain for each one of those and have siloed platforms, because that would just be inefficient and cost ineffective. That would be thing one. But do go check out the poll, because there's a bunch of people much smarter than me coming in with some really great responses. So thank you for asking that question.
Thank you so much. And we have actually hit the timing perfectly. We got 2 minutes. So as they say, I'm waiting for my invitation.
We will get a dedicated. So what did we talk about at CogX podcast episode, Genevieve? We'll make it happen. Shameless plug again for those who haven't checked it out. If you want to know more about blockchain, if you're new to the space, if you want to hear about some of the countries, some of the companies, some of the people who are doing some of the great work, Genevieve episode coming soon. Please do go check out Blockchain Won't Save the World podcast. All the stuff that we talked about here is kind of built out in more detail, loads of case studies, accessible, no hype, learn at your own pace, and hopefully you find some stuff in there that's inspiring.
So thank you so much, Anthony. This has been such a great thing and a great day. Really made it very special to get to meet and to hear from you. And with that, we conclude our timing. And till the next time.